Katie, welcome. What differentiates this product from all the other ESG offerings out there?
One of the major differences of this ETF, first of all, Kelly, thanks for having us on. One of the major differences of this ETF is, first of all, that it's active, whereas many other sustainability ETFs aren't, and it's focused in being active, so only 30 to 60 holdings. Second, it's very diversified in how it's attacking this issue of sustainability. So it's not just about, for example, clean energy. We're also investing in sectors like sustainable consumer, water, et cetera. The third would be that it's all cap in nature. So we have about 20% of this ETF investing in companies in less than $10 billion of market cap. So we're really excited about bringing this to the market. Active ETF, investing in the solutions providers to the climate transition, which, as you noted in your opening comments, is something that we think is a great wealth creation opportunity over the next 10 years. Gives clients the opportunity to invest in companies that are going to create the planet that we all want our children to inherit, while also creating a wealth creation opportunity.
Granted, a lot of people see, the kinds of companies typically in ESG funds and say they're not that different from the traditional S&P 500. In many cases, they're thought of as kind of dirty companies that buy, clean power credits to offset whatever they're doing. That sort of issue to the side, I'm also curious about the fee structure, because both ESG and active management typically come with higher fees than people in the ETF world, who are used to the passive index options might be used to. What's the fee structure here?
This is 75 basis point fee structure, and it is wrapped, as you mentioned, ETF. So you're getting the transparency, the tax efficiency, and the ease of trading of an ETF. And the 75 basis points is really in the range of where a lot of these active ETFs are being priced, because we're offering obviously something very differentiated from market cap weighted indexation. Just taking a step back, because we talked a lot about market cap weighted providers at the outset of this, we're really big believers that the world is changing rapidly over the next 10 years, and clients that have a lot of that market cap weighted passive indexation are missing out on a lot of the trends that are going to drive the world and equity markets, in our view, over the next 10 years. So this is one ETF that we've brought to the market today, but we're bringing more. We've managed thematic equity at Goldman Sachs Asset Management for over 6 years. We managed $20 billion, but this is actually the first time we're bringing it to the U.S. market. We think U.S. clients need more options for future-proofing their portfolio, and this is one of them. And we think the fee really is quite well priced for the type of innovation and exposure that this product is going to provide.
Sure, and
Kelly,
I was just going to say, I actually want your kind of general take on the market right now, but just one more question, which goes back to the ESG issue and kind of who qualifies is, just thinking through these companies themselves and the exposure or the holding period, what would you say to people who wonder about the selection process and say, okay, well, what happens if a company is high environmental but does poorly on governance, for instance, or vice versa? Which of the inputs dominate, or how are they weighted?
So just in the future Planet Equity ETF, just to be clear, we're going to invest exclusively in companies that are the solutions providers to this incredible transition to a more sustainable planet. And those companies will also be very strong across all characteristics,
Gotcha.
Environmental, and governance. But just to add one thing, just to give you an example of a type of company, because this is, again, not just clean energy and not just good ESG characteristics. What are the companies that are going to help us in this transition that we need to make? An example would be sustainable consumption. So this is something that might not be on people's radar, but the fashion industry, of course, is a very large polluter.
Mm-hmm.
They are 8 to 10% of all carbon emissions, second biggest user of water. We're invested in a company called RenewCell, which will be available in this ETF, that actually does clothing recycling using a very similar process for recycling paper. So here's an innovative company making sustainable consumption, to scale it and to contribute to this idea of a more sustainable planet.
Shepard Smith here. Thanks for watching CNBC on YouTube.